Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the 30-minute price chart for AMC Entertainment Holdings Incorporated, stock ticker AMC. So as we can see here, we're seeing some fairly volatile price movements here. These have happened at somewhat predictable levels. In prior videos, I have been mentioning roughly this 575 level as being particularly important. We did see a short-term rally into this area, complete with even a price gap to the top side. But then very quickly, we can see that as we approach this area, there was a major rejection here to the downside. We have to remember here, this is a 30-minute chart. This is not a daily chart or an hourly chart or something like that. This is one of the shorter term charts here. So the fact that this price candle here, the fact that it's red, even though we were approaching these recent highs, is significant, because what it tells you is that there was a very forceful rejection from this area. Anybody that's been watching these prior videos knows that I've been watching this price zone for quite a while now. And I've been trying to ask the questions in the comments, which kind of center on, this issue of, where exactly are the short sellers most likely to be clustering their orders? What is the most likely price zone? Where these people are likely to start emerging and likely to start entering into their positions, their short positions. So as we can see here, this is the price level where this occurred. The move itself was very forceful. I mean, essentially the moment that we reached this 575 area, we started to see major selling pressure. This is a very short term period of time where we're seeing these declines. So, what this really means here is that we need to completely revisit the entire analysis at this point, because this move lower did so much damage to the chart that the outlook has to be approached from a different viewpoint. So essentially what I've done here is I've taken these Fibonacci retracement zones, and they have now flipped around into the other direction. So we're now going to be looking at retracements higher rather than retracements lower. As we're doing this, we can see that there are some significant price levels now that have already been breached. These are some very significant price moves that are really occurring in both directions. I mean, the majority here is still focused on the downside. We can see that in the trading volumes themselves. You don't have to take my word for it. It's the trading activity is right here, and you can see that these bars, these red bars, far outweigh and outstrip these green bars, which tells us that there's much more, selling activity in the market when compared to buying activity. The good news here is that this is starting to decline. I mean, this activity here is starting to diminish a bit, and what we're starting to see here now is more of an entrance from buyers in the market. And as we can see here, if we're looking at the indicator reading, the relative strength index did fall into oversold territory, and we've now started to bounce out of it, complete with a moving average crossover. So I'll explain all these things in detail here, so that they'll be easier to understand. So this purple line down here is the relative strength index. The yellow line is the moving average of the relative strength index. Here we can see that the RSI moves below the 30 level, which is considered to be oversold territory, which basically means that the The share price has essentially fallen too far too quickly. It's fallen. It's too far outside of its standard deviations. It's too far outside of its normal moving averages, and that's not really, it's not really a big mystery here when you see the size of these candles here to the downside. So what this really is telling us here is that these moves have become excessive, and in some sense they're unsustainable. You need to start to see a bounce here to the top side in order to correct the situation and to get back toward the moving averages. So we can see here that this did happen. We rolled out of oversold territory, and we also saw a moving average cross, moving average crossover in the relative strength index. So essentially, this purple line crossed above the yellow line, and that does give us another bullish signal. So we can see what unfolds here. Now we start to see a rally here to the top side, and this rally is already breaking some very important price levels that should actually be starting to get people excited here. So we'll go over what these are. As we're moving this decline lower here, we can see that let's define how we're doing this. So we're taking the price move at 575, and then we're extending this toward the recent price lows, which came in at 454. So if we're looking at this as the current dominant price move, we can see that the share price quickly rose out of this red zone here, which is the 23.6% Fibonacci retracement. It's a resistance zone. That did coincide here with this yellow line, which is the 20-period exponential moving average. So this upside break here is significant. It is a bullish event. It is good news. It might be hard to believe with all the selling pressure that's been going on here. Okay, so from there, we start to target this orange region here, and we can see that the share price did manage to break through here fairly quickly. Which means that the stock broke above its 38.2% Fibonacci retracement and its 50-period exponential moving average, which is this orange line here. So these are both positive events here. And then in addition to that, we can start to see that this yellow line and this orange line are starting to cross over into the upward direction. So we're not there yet. We haven't seen this happen yet. But if we do see this if we do see this yellow line cross above the orange line, that would be a further bullish signal because it would suggest that trend momentum is starting to build to the top side. Okay, so where are we currently? Currently, we're trading at roughly the 50% Fibonacci retracement of this move. Okay, this is important because it essentially means that we've now regained half of those losses. Okay, and this was done fairly quickly. This was actually done a bit quicker than the losses occurred. So that on its own is also good news. Currently we're trading at a very significant price zone here because prior highs came in at 516, and this does coincide with the 50% retracement level. As that is happening, you'll also notice that the share price itself is starting to move above this purple line and this blue line. The purple line is the 100-period exponential moving average. The blue line is the 200-period exponential moving average. These are all coming into contact in the same region here, as you can see. So we're getting a bit of resistance here. We are seeing a bit of a price failure. There's a red candle here, but the trading session is not over yet. And there is still a trading session tomorrow and the next day and the next day after that. So, just going into the future, just because we see a bit of a price failure here does not mean that we will not break to the top side. Ultimately, what I'm saying here is that if we do break here, you would expect to see a more forceful break to the top side because there are several resistance zones here that are coinciding at roughly the same area. So we're not there yet. We will continue watching this stock. This is real chart analysis as opposed to reading somebody else's dumbass tweets. We don't do things like that here. We look at what the market is actually telling us. So we will come back tomorrow and do another analysis and see whether or not this price level actually broke. Here's the current market analysis for AMC Entertainment Holdings Incorporated, stock ticker AMC.